What does it tell us about the global IT services landscape when Infosys, India's second largest IT major, secures 3.8 billion US dollar in new deals while revising its annual growth outlook? How does this performance compare with peers like TCS and Wipro, and what are the key takeaways for India's tech sector in the age of AI? Welcome to Alpha Call. I'm Radhakrishnan Chonat from Alpha Street, and in this episode, we decode Infosys Q1 FY26 results, going beyond the headlines to explore deal momentum, digital strategy, and what the numbers really mean for the road ahead. Infosys, with over 340,000 employees and clients spanning 50 plus countries, is a barometer for global IT spending trends. And as enterprises worldwide reallocate their budgets from discretionary projects to AI led transformation and cost optimization, Infosys has pivoted aggressively towards large vendor consolidation deals and next gen digital services. In Q1, the company highlighted its AI first strategy anchored by Infosys Topaz, a suite of AI powered platforms aimed at productivity, digital engineering, and customer experience. Infosys CEO Salil Parekh emphasized that AI adoption is moving from experimentation to scaled deployments, a narrative echoed by peers like TCS and Wipro, whose alpha call we had done earlier. But in Infosys's case, it is leaning heavily on measurable client productivity gains as a differentiator. Let's now break down the financials. Revenue 179 crore, up 7.5% year on year and 2.6% sequentially, with constant currency growth of 3.8% year over year. Net profit 6,924 crores, an 8.6% year over year increase driven by disciplined cost management. Operating margin 20.8%, which is down 20 basis points quarter over quarter and 30 basis points year over year, reflecting wage hikes and increased investments in sales and marketing. Free cash flow 884 million US dollars, representing 109% of net profit. The key takeaway: Infosys is balancing margin discipline while chasing top line growth through mega deals. While TCS reported subdued growth and Wipro focused on margin stability, Infosys delivered sequential revenue expansion, a sign that its large deal strategy is definitely gaining traction. But the headline figure in this quarter for Infosys is definitely the 3.8 billion US dollar in TCV, or total contract value, with 55% net new deals. This includes a 1 billion US dollar vendor consolidation contract with a global bank and several large wins in sectors like healthcare and retail. Now, from the Q&A, we noticed that the management stressed that its deal pipelines remain robust, with sequential TCV up 44% compared to the previous quarter. Importantly, Infosys is now embedding generative AI into large enterprise platforms, citing productivity improvements of 25% for software developers at one global client. Geographically, Europe grew 12.3% year over year, significantly outpacing the company average and peers like TCS and Wipro. North America grew 2.9% sequentially, but verticals like retail and manufacturing remain cautious due to macro uncertainties. So, what's this AI strategy? Now, Infosys' Topaz strategy sets it apart. The platform is designed to integrate AI across business processes, software engineering, and customer service. Now, compared to TCS's AI efforts, with its focus on domain specific use cases and Wipro's narrower IT narrative. Infosys is emphasizing enterprise wide AI transformation. Scaling such AI deals is still a work in progress. Now, while AI driven projects are growing, they remain a small percentage of overall revenue. The company is also investing in employee reskilling and proprietary AI models to stay ahead of commoditized services. Infosys revised its FY26 revenue growth guidance to 1 to 3%, reflecting macro uncertainty and slower discretionary spending. Margins are guided to remain within 20 to 22%, which is competitive relative to its peers. So, what are the risks? Pricing pressure in traditional services, slower recovery in manufacturing and retail verticals, and a competitive deal environment. Yet, Infosys' strong balance sheet and large deal momentum offer a cushion. Now, for the IT sector, the key insight is very clear. AI and vendor consolidation are driving the next wave of deals, and Infosys is positioning itself as a strategic partner for clients looking for both cost savings and digital reinvention. To sum up, Infosys's Q1 FY26 results highlight a company in transition, combining strong large deal wins with a bold AI vision. Now, while near term growth remains modest, the underlying narrative is about building resilience and future proofing its services. So, what's your view on Infosys' AI strategy? Do you think its $3.8 billion deal wins signal a turning point for the sector? Do share your thoughts and questions in the comments. And that's a wrap for today's Alpha Call. We would love to hear from you. I'm Radhakrishnan Shonat. Thanks for tuning in. And as a disclaimer, this episode is for information purposes only and does not constitute investment advice. Alpha Street is independent and not affiliated with or sponsored by the companies mentioned.